What's up traders, welcome to Failure to Displace. We are back after a few days hiatus, having vacation with the kids. We are in August, which as ICT says, it's probably the best time to take vacations. So I've not been trading this week, but I am going back through price action to see what opportunities were available. In this video, we're going to take a look at Monday's price action and the 3 potential trades that I've identified, leading to approximately 9 hours in profit with 1 loss. So let's jump into the analysis now and see how we came up with these results. We can see on Friday we had a huge news release and a massive pump in the New York AM session. PM then started to retrace. What I often find, and you'll see more often than not what happens, is these huge pumps do get fully retraced. So we can see we've had a bearish reaction in the PM session. Asia is kind of following suit. It's been consolidating under the Asia low as we're coming into Monday's London session. We're leaving bearish fair value gaps through New York PM into Asia. Bearish fair value gaps are being respected. We can see, obviously, given the huge pump on Friday, we've got massive inefficiencies to fill, so quite easy for price to fall lower. So I am already bearish going into this session, just considering the pump on Friday, and that more often than not we will retrace these moves in full. This is just full on manipulation, and we'll want to come back and fill these inefficiencies. So I'm going into this session with a bearish bias already. We have broken below the low on Asia, so potentially there could be a reversal setup on here, but I'm not really interested in looking for longs if I'm honest with you. Let's skip on the charts and see what we get offered. So we can see again we're creating bearish fair value gaps on the 5-minute chart, pulling back. This 5-minute fair value gap was respected and we've displaced even lower. So this is telling me we are in a trending market here looking for lower levels. What I'm going to do as a point of reference is I'm going to pull a fib from Friday's low up to the Friday's high. So we can just analyze where the optimal trade entry would be from this pump, which is going to give us this 618 level here. So this is an area to monitor. Funnily enough, we do have a nice fair value gap at that level as well. So let's mark that just as point of reference. Not that I'm going to be looking for longs in this area. As I say, I am bearish because I expect this low to get taken out eventually. But it's just been nice to see how price reacts at this level. Again, bearish displacement coming down. Zoom in. So we'll come into that 5-minute fair value gap now when we are approaching optimal trade entry. Straight into optimal trade entry, 50% of that 5-minute fair value gap. So we have had a reaction there. We could drop onto the 1 minute. When I get to optimal trade entries on higher time frames, often I will go into the 2022 model on the 1 minute time frame. So let's just take a look and see if there is anything here. We've hit optimal trade entry. We have a break of structure here. And we did have a fair value gap. Let's just wind this back by a couple of minutes. So optimal trade entry of that Friday pump, we have this form. We've got a break of structure at this point. There is actually a smaller break of structure in here. So there's 2 breaks of structure. We've left a fair value gap at this point here. So this is a 2022 mentorship model. This would be very risky. You are catching a knife, as they say, if you are to take this. However, the levels of confluence that we've got are optimal trade entry and a 5-minute fair value gap with a reaction at the 50% of the fair value gap. So you've got 2 levels of confluence here for price to possibly reverse. Your entry on the 2022 model would be at this fair value gap, stop loss below the low. And then you just look for a decent take profit, something around 2.5 are maybe relative equal highs here. So we've got tagged in. Price is accelerating. Excuse me. Price is accelerating away nicely. So we can see the reaction that we've had at the fair value gap and optimal trade entry. So that has worked out quite nicely. We are up 1.7, 1.8 R at the moment. We've taken these levels of liquidity. I would really want more than 2 R. Nice reaction. So there's our 2.5 R there. So there was, at optimal trade entry, 50% of that 5-minute fair value gap. There was a risky but legitimate 2022 model entry at this point. Let's jump back onto the 5-minute chart now. As we mentioned, I would be looking more for short positions in this because I have a feeling that we should take out New York AM session low from Friday. So we're pulling back into this fair value gap now on the 5-minute. This pullback will go from the high to the low. Again, as another level of confluence, is taking us 5-minute fair value gap and optimal trade entry here. So this is where I would be interested in possibly looking for shorts to take price down towards the New York AM session low. So again, we're coming to optimal trade entry on a continuation. So I'm going to look at this on the 1 minute. So this isn't the 5-minute OTE strategy. I'm using optimal trade entry as a confluence linked with fair value gaps. But I will be taking entries based on the 2022 model on the 1 minute time frame. So we've hit optimal trade entry here. So this again would be a good confluence for closing out of that long if you did take it. You've got to be aware of the optimal trade entry up here, which would have given you a 3R. We're into this 5-minute fair value gap now. There's 50%, tapped perfectly, a small reaction. We're into silver bullet hour now. So again, with my bearish bias, I would be looking for some kind of reaction to take us lower. We've built this nice run of liquidity here that we could take out quite aggressively. So our swing low at the moment for a break of structure on the 2022 model is right down here. So we would want body closes through there with displacement. Right, we've made new high. So our swing low is now here. Again, respecting the 50% of that 5-minute fair value gap. We just want to see some kind of aggressive movement now instead of this consolidation. Still using the same breaker structure. So we've closed above the 50% of that fair value gap. Coming down, we have had a break of structure here. We've not had a body close. Got a body close there. Taken these equal lows as well. 345. 50% closing below. You could take an entry off this fair value gap on the 1 minute. Stop loss would be above the high, and then again you are aiming really for current session lows all the way down here if you do get it. It's not tagged the fair value, that's tagged you in. Still kind of consolidating in this fair value gap though, so it's not great price action. So there's a loss. This is more of the price action that I was looking for, so we've got a proper move away now. We've built this consolidation, building liquidity, but an aggressive move out of that consolidation. Let's see if we get another entry. Aggressive move back in. We've got a bit of a balanced price range here. So a balanced price range is where we have a bullish fair value gap followed by a bearish fair value gap where the two overlap, which is just that little area there is our balanced price range. We haven't got a break of structure yet. The break of structure is here. So we want some body closes. There's a body close, not a body close. So it's a rejection. So we've got body close here. Yeah, body close here, balanced price range. So I would potentially be looking for a second entry. This is more of the price action that I wanted to see. This looked like a tight consolidation. Here we can see we've had a run on liquidity, taken all these guys out, and then pulled straight back into the range. So aggressive out, aggressive back in. That is much better price action in my opinion. Body close over the break of structure, so I would take an entry from that point. Stop loss just above the high. We're leaving fair value gaps now. This here is a breaker block. So this candle here is a breaker block. So the potential entry now would be off the breaker block, stop loss above this high, expecting the breaker block to hold price down. This is the last bearish candle before we took all the highs. This should have acted as an order block, but it failed. Price is now below it. Therefore, this will potentially act as resistance. Let me just get rid of that. This block, red candle here. Okay, so we've tapped the breaker block. I think I have a preset for them actually. We'll label that as a breaker. So we're now in the trade. I'll be looking to at least run out these lows. That's a crazy 6R, which would be a lovely trade to be in. Yeah, we reacted straight away off that breaker. So this, you may have heard of people referring to the unicorn entry, which I believe this would classify that breaker block with a fair value gap. So again, two levels of confluence. We've got a 5-minute fair value gap that has now been respected again. We've closed back through it. Good, strong price action. Let's take a look at this. We are into the new hour as well. So this strong bearish move has happened at the open of the new hour. So more confluence, more volume coming in from hourly traders. Price is driving away really nicely now. You could be potentially looking to take some profits. This is swing low here, looks like a good area to take profits, which you've just hit. Or ultimately I would expect the session low to get taken. Getting very close. And there we go, we've taken the session low, so that would be a nice close out for a really nice 6R trade on there. So we did have one fail. The 2022 model worked here for a potential 3R going up into this 5-minute fair value gap. We had one false start, which if we think about it carefully, I can't even bloody expand that out now. Let's just delete it. This was our false start. Got tagged in and ran straight through. And if you're looking at this, it's not particularly aggressive price action, which would indicate why it was maybe a false start. I did say at the time, wasn't too sure about it. But then we had the additional confluences on this second entry of there being open of the new hour, volume coming in. So they've pushed up just before the new hour starts, dragged loads of traders into the market thinking this is going long. Pulled it straight back inside of the range, smashed all those longs, breaker block, fair value gap, 2022 model break of structure for a 6R trade down to the low. So really, really good London session there. There we go, traders. That was Monday's analysis from the trading session in London on EURUSD. If you enjoyed the video, please give it a thumbs up. And if you have any questions, please leave them down in the comments section below. And as always, I'll do my very best to get back to you and help out where I can. If you're enjoying the content, consider subscribing. I'm dropping videos like this more or less daily, give or take what's happening with the kids. So thanks for watching, and I'll be back again shortly with another video analysis.